All right, some of you may have heard this before. We've been through this song and dance. But you guys may not know that this time could be a little bit different because the Democrats could very well want to use this as an opportunity to make Donald Trump look bad. And I'll explain why. We're going to go over a possible government default, what that would yield in terms of an economic recession, a credit downgrade for the United States, the impact on everyday Americans, the global implications here, undermining faith in the United States governance, and the long-term economic consequences. And we're going to do that in less than 10 minutes. You've seen this before, but this time is a little bit different in the sense that Democrats would love to shaft Donald Trump with the first government default in many years. Treasury Secretary Janet Yellen has informed Congress that the United States could reach the debt limit between January 14th and 23rd of 2025, right around the time when Donald Trump is taking office. Yellen emphasized the urgency for Congress to act in order to protect the United States' credit by raising or suspending the debt ceiling. So Yellen indicated that extraordinary measures would have to be taken, that if the debt ceiling is not addressed, the Treasury would need to implement extraordinary measures to prevent a default on debt obligations. Now, as far as government funding goes, House Speaker Mike Johnson recently facilitated the passage of a bill that extends government funding until March of 2025, and thereby averting a federal government shutdown. However, this bill did not address the debt ceiling issue. So President-elect Donald Trump has advocated already for the elimination of the debt ceiling, describing it as a psychological constraint without substantive impact. And he has urged Congress to abolish the debt ceiling entirely. Now, raising the debt ceiling does not authorize new federal spending, but it does allow the government to meet their existing obligations. Failure to raise or suspend the debt ceiling could jeopardize the creditworthiness of the United States Treasury securities, potentially impacting trillions of dollars in investments and the global economy. So this is the talk of the town today. Failing to raise the debt ceiling, ladies and gentlemen, can have incredibly massive economic, financial, and social consequences. So let's discuss some of these key impacts here briefly. Number one, government defaults. The U.S. government would be unable to pay its bills, unable to meet its obligations, including paying interest on its debt, which is now, of course, at an all-time high. Social Security benefits would not be able to be paid. Medicare payments would be delayed, and salaries for federal employees and military personnel could not be paid. This could easily lead to a global financial crisis. A default would undermine confidence in United States Treasury securities, and they are, up until now, have been considered one of the safest investments around the world. Potentially, this would trigger a global financial crisis and a massive fire sale of United States Treasury bills and bonds, especially by other countries, notably China, who has over $890 billion worth of treasuries. Number two, an economic recession. A lot of you may be aware that there's a high likelihood that we're already in an economic recession. All signs point to yes. Investors would demand higher interest rates for Treasury bonds, increasing the borrowing costs for the United States government, for businesses, large and small, and consumers, everyday consumers just buying goods. This would definitely definitely cause massive shockwaves throughout the stock market. Uncertainty and fear of this default could lead to sharp declines in stock markets, wiping out trillions of dollars in wealth. And if you guys were watching Wall Street today, you saw blood red all across markets, with very few exceptions. Notably, one exception, GameStop. Interesting, huh? Interesting. Number 3, credit downgrade. The ratings agencies may very well downgrade the credit rating of the United States, which has already happened. This happened in 2011 during a debt ceiling standoff that had widespread implications in a massive drawdown in our financial markets, in the stock market and bond markets. This would definitely increase the borrowing costs for the government and reduce investor confidence, both retail and institutional. Number 4, the impacts on everyday Americans would likely be fairly large. There would be delayed payments on things like Social Security, Medicare, veterans benefits, and federal employee salaries, which could be delayed or reduced. There would be higher borrowing costs, increased mortgage rates, higher auto loan rates, higher credit card interest rates, making debt more expensive for consumers, even if you already have the debt, for example, with credit card rates. Now, economic instability could definitely lead to layoffs and higher unemployment as well. And number 5 would be the global implications here. We are looking at the instability of the US dollar, the fiat. The world reserve currency would lose its appeal, and that would ultimately definitely destabilize global financial markets. There would be reduced demand for U.S. debt, whereas foreign governments and investors may lose confidence in U.S. treasuries, reducing demand and increasing the cost for the United States government to borrow. This would, of course, number 6, undermine the faith in the United States governance. Political dysfunction causing this kind of debt ceiling crisis would definitely erode the trust in the ability of the United States politicians and lawmakers to manage fiscal policy. This would, of course, weaken our global standing around the world. Number 7, the long-term economic consequences. This would lead to higher national debt costs. A default or near default event could have lasting effects on the cost of borrowing, increasing the national debt over time. We are already paying more than ever in the history of the United States, in the history of any country of the world, more in interest on our national debt every single day now than has ever been seen by any country in any time of history. We could potentially be seeing here a precursor, or be having an idea of what the fall of Rome may have been like. There are a lot of similarities. And of course, the U.S. could lose its position as a global economic leader if this confidence in our financial stability diminishes. So given these massive risks, most economists and policymakers argue that raising or suspending the debt ceiling entirely is crucial to maintaining economic stability. Janet Yellen wrote this letter in which she said, the Treasury currently expects to reach a new limit between January 14th and 23rd, at which time it'll be necessary for the Treasury to start taking extraordinary measures. I respectfully urge Congress to act to protect the full faith and credit of the United States. You guys may know that House Speaker Mike Johnson barely managed to avoid a federal government shutdown last week by pushing through a bill guaranteeing 90 days of more government funding, though the bill took no action to actually raise the debt ceiling. President-elect Donald Trump unsuccessfully tried to abolish the debt ceiling entirely, calling on lawmakers to get rid of the statutorily imposed mechanism that was initially signed into law when the United States was still on the gold standard. And that's a big issue that we're having now. We're no longer on the gold standard. So things have changed quite dramatically since then. Now, Donald Trump has come out and said, the Democrats have said they want to get rid of it. If they want to get rid of it, I would lead the charge. It doesn't mean anything except psychologically. The issue here is that this time is a little bit different. The Democrats in Congress, in the House, would love to be able to point the finger and say, Donald Trump just got elected and became president on January 20th and has already defaulted on our country's debt. So, again, raising the debt ceiling doesn't actually require any federal spending. It merely continues to guarantee the safety of the U.S. economy or institutional investors in foreign governments. The problem is that there's a ridiculous amount of spending that has been ushered in via the Biden-Harris administration, which has increased our national debt to the tune of $1 trillion every 3 months. Every 90 days, we are seeing $1 trillion more debt because of the federal government's irrational and unsustainable spending. That is why we need the Department of Government Efficiency and Donald Trump to come in and really clean house. So, but most of the national debt is actually just private sector wealth held in the form of U.S. Treasury securities. And because these U.S. Treasury securities are guaranteed by the full faith and credit of the United States, wealthy investors prefer them to bank deposits. Because when you have a bank deposit, they're only guaranteed up to $250K by the FDIC. So should Congress fail to raise the debt ceiling, it would jeopardize the viability of the U.S. Treasury securities and trillions of dollars in investments and potentially the global economy itself. Hence why Yellen is saying that there's another crisis coming unless these extraordinary measures are taken and the debt ceiling is raised. She says here, let me find this quote. To the extent that the national debt is held domestically, this is the St. Louis Fed says, to the extent that the national debt is held domestically, it constitutes domestic private sector wealth. The extent to which it constitutes net wealth can be debated, but there's not much doubt that at least some of it is viewed in this manner. The implication of this is that increasing the national debt makes individuals feel wealthier. And at the same time, now I'm going to ad lib here, increases inflation, increases the amount of money that we have to pay, decreases the value of our U.S. dollar, and makes us all just that much poorer, if you will, for lack of a better word. Tech says, I mean, the government is the one at fault with all this spending to Ukraine and ridiculous spending bills, and you could not be more correct. Everlong Gaming says, yeah, because increasing the credit limit on an over-leveraged credit card is the best way to fix the debt. And you are absolutely right, my friend. As you can tell, that is not something that is sustainable for the long term. We can't just continue to print more and more money and pretend like everything is okay. Quant, Typo, Manifest, cheers, my friends. Welcome back to the channel. Huge shout out to you guys. So yeah, I just wanted to give you guys this update because you're seeing this in print. We're seeing this barely being talked about on the mainstream media. And the people, a lot of people will say, yeah, they'll raise the debt ceiling. We've seen this before. As a matter of fact, we talked about it here on this channel a couple years ago when this was happening. And they just barely managed to raise the debt ceiling in time last time. The difference is the DNC and the deep state did not want Joe Biden and Kamala Harris administration to default on the debt. Neither did the Dems in Congress, which held the majority. Now, however, there are a significant number of rhinos Republicans in name only that sit in Congress and the Senate that would very much like to work with the Democrats to make Donald Trump look bad and catastrophize his entire presidency and legacy, especially if it would give them a better chance of potentially winning 2028. So I want you to ponder on that, my friends. And we're going to leave this video there on a nice high note to leave you guys with something to think about. But briefly, AMC Hawkeye says, we increase the debt every year for the last 40 years. The reasons have no meaning. It's just a money laundering system in the name of interest payments where we, the people, allow it to happen over and over. And every time it happens, ladies and gentlemen, we get poorer and poorer. Or if you're rich, less wealthy and less wealthy. But at the end of the day, it is a further destruction of the middle class. Inflation is nothing but an invisible tax in which your money is devalued and your money is taken from you every time you pay a utility bill, every time you fill up your gas tank, every time you get groceries, anytime you pay your taxes, you're paying more. Even though they're not directly increasing the tax rate percentage, you're still paying more because you have to come out with more dollars than you did last month and last year and last decade. Significantly more. Cheers, my friends. Have a great rest of your evening. We're going to keep an eye on this, and we will discuss this further tomorrow. I wish you peace and wealth, and make sure you're properly hedged. If you are concerned about the stock market and the bond market, take a look into private equity. Take a look at companies right now that are private that may soon one day have an IPO that could potentially make you a lot of money.